Most beginners think the leverage is a shortcut to get rich fast, but in reality it's the fastest way to blow up your trading account. Today I'll show you the biggest mistake new traders make with leverage and how you can avoid it. So now let's begin with the first part of your mistakes. The first mistake is the illusion of fast profits. So the first is the illusion of fast profits. Leverage multiplies your position size with 10x leverage. A 1% move can mean 10% of profit. Sounds amazing, right? But here's the catch. The same works against you. That means you can be the pro trader, the BB trader, but the market doesn't change. It works always against you. And your leverage lever, of course, works against you too. The exchanges want you to lose money. The market wants you to lose money. Everyone wants you to lose money. So here, now I'm going to show you practice example. So for example, you get a good deal here, a good deal here, and a good deal. And of course, everything falls with big leverage. You get a lot of money. You think you are a pro trader. It is not just a simple luck and easy trend to trade. You think, wow, has such good results. I need to place a highest leverage. For example, here to trade with 10x leverage, here 10x too, and here too. But after the all feelings above your greatest training career, you place the deal like that and with the price reversed like that. And here no. Trade 100x leverage and use all what you are earning here and everything what were on your training balance. And it is bad thing. If you trade by 10x leverage, it's okay in different ways. You can look by the hour angle. 10x is okay, but 100x leverage is just a casino. Or only 1% movement or 0.1% movement will blow up all your account. You will lose all your money. You don't know what will happen in the next second, which news will affect on the market, which politics will give his speech and break the price, break the structure of the market. Or don't trade by the high leverage point. Only if you have some insight from the dump of the Trump coin are going to up in the next 5 seconds. So the biggest mistake what beginners make and the second mistake on our list. Most beginners open huge leverage positions without proper stop loss. They think if the market blows my way, I will double my money. But the truth is just a small move and then slam wipes out their account. So now I will show you how to place a perfect stop loss by the smart money concept. Let's begin from this example. For example, here we have a good deal from the our Fuji. You can define it like that. The deal I will open here. Also 50% of it is a. And now I will give you a tip how to place stop losses and take profits in every positions, and you not are gonna be wrong. So the first best way to place your take profits and stop loss is on the liquidity pools. For example, here the take profit you need to place of the liquidity pool, but with the stop losses the liquidity pool can be grabbed by the price to get reversed, so we need to place it a little bit lower. For example, here the another way, if you enter from the Fuji, for example, how to enter from the Fuji I told you in the previous videos in my channel. You can place the stop loss in different place. Conservative stop loss and risky stop loss. Conservative stop loss looks like that above our Fuji point, and risky stop loss is placing on the edge of our Fuji. So in the case when, for example, we enter the order block, we need to place our stop loss lower with the order block and lower where our pool of liquidity. And for example, if you trade by the technical analysis, for example, like here you open the deal from the support and resistance levels like that, don't place the take profit flows to the support level breakpoint. Move it a little bit higher. Yes, you get lower money, but the deal will be successful, will be more successful. And I don't recommend you trade by the support and resistance levels because it is don't work in the long distance. So the best way to place take profit is on the grabs of liquidity, and the best way to place stop losses is lower with the pools of liquidity situated, and there are two ways with the risky and conservative of the edge of our point of interest zone from which we can enter a deal, or lower at the end of the candle. So the next big mistake of new traders if we leverage the leverage wrong. For example, in smart money concept and in our concept, the real traders, good traders risk only by 1% or 2% of their account on the one trade. If we want to be structured and successful in the long distance, we ready to lose 1%, get 3% from the deal. So the best correlation for the deal is 1 to 3. 1% to 3%. In our case, you can increase it to 2 to 6, and it is the best methods to open the deals. So if you will trade by with strategy, if you win one deal, you need to lose 3 in a row, or 3 in a row to come back to the beginning or going to the minus account balance. And now I'll show you how to define and how to trade by this correlation of the percents. Now let's switch here. For example, we want to open the long position here, and we need to define what we want to trade. 2 to 6% on 1 to 3. Let's begin from the 1 to 3, and here we can see risk reward ratio. So now we are going to settings. Here we are place our account size, your trading account, on which amount of money you trade. So here you place the risk you want to lose. It is not gonna be higher than 2%. I recommend you to place 1%. So it is all settings you need to place. And now we can see the risk reward ratio. If we will increase our take profit zone or decrease our stop loss, the risk reward ratio are going to change. And to get such amount of risk, you need to open the trade for this quantity of your crypto or forex, like that. And to open the deals on the higher time frames, the leverage will help you. You need to use the leverage only for correction, your amount of your quantity of cryptocurrency is the deal to get a good risk reward ratio. So you can place 100% of your account on deal, but you won't last long. With this correlation, you are going to get huge amount of money, save a lot of lives and your life. Leverage is not the enemy. The lack of risk management is. Leverage is not the enemy. The lack of risk management is. Use low leverage, always set a stop loss, and never risk more than 1 or 2% of your account on a single trade. Professional traders use leverage as a tool, not a lottery ticket. So the biggest mistake beginners make with the leverage is simple. Chase fast profits without understanding risk. Don't fall into the trap. Master risk management first, and leverage will become your ally instead of your enemy. If you found this helpful, hit the like button, subscribe, and check out our videos where I break down the smart money concept and strategies you can actually apply in training.